If we have a look at what it's all about, here is a quick snapshot of the residency issue. So I've tried to condense this as best I can. Hopefully, it means that you're not going to be too overburdened mentally. But the current rules are on the left-hand side. And the current rules basically say that if you're in Australia more than half the day, you're going to be a resident. But you can see there in white, the big factor is unless the commissioner is satisfied you're usually living overseas. Now that's important for someone like myself who's stuck in Australia, where my home is in Singapore. I've still got it. I haven't rented it. I haven't sold it. I haven't cancelled the lease. Everything's there. It's very obvious I'm going home. So the commissioner would rightly say, oh, well, Steve, even though you've been stuck here for ages, your intention is to go back to your home in Singapore, and therefore he can treat me as a non-resident. Now, the problem is he'll argue the point. So I have to then prove it to his satisfaction. He's very rarely satisfied. So that ends up being in a dispute, and we have to go to the umpire, being the tribunal or the courts. Now, it comes under a very simple, statutory test in theory, but as simple has become complicated. Resides, where do you genuinely live? Domicile, where is your main area of existence? And the 183 test is more a tie break than a determinant. So if all the other things are a bit cloudy, where you are the most of the time can be the decision, but it still is very much a subjective test based on the facts of the case. And this has been very frustrating for the ATO, because the facts are different for everybody. So they have to reinvent the wheel, reassess, reapply, rethink, and that's really driving them nuts. Now, the only easy test is the Commonwealth Superannuation Test, which means if you're an employee of the government and you're having contributions as an active member in a superannuation fund of the government, then you are a resident. So that usually counts for people being posted overseas into embassies or on foreign assignment. If you look at the proposed, I suppose finishing off there, the residency always has, commenced or ceased based on the day your intention changed. So when you intended to move from Australia overseas or overseas to Australia, that day of intention change was the date your residency changed. So notwithstanding, for example, someone like myself who might be stuck here, if I end up getting frustrated and say, you know what, I'm sick of this, I can't wait any longer, I don't want to go home to Singapore because it's too hard, I'm now going to stay, then that day that I make that decision is when my intention changes and is when my residency would change. And that's always been the case. And of course, you would want supporting evidence, etc. So it becomes subjective again, and this is where disputes arise. What they're proposing is to basically have the 183 days full stop. So they're saying if you're in Australia for more than 183 days, you are resident. No questions taken. And that's sort of makes sense. I mean, it's a bit unfair to someone like myself, but you can understand the logic because they're tired of this whole subjective argument and debate and, tossing of the coin and proof of this and denial of this. It's all getting too hard. Now, importantly, they are sensibly proposing, and again, we'll wait to see the legislation, that the 183 days would exclude any days where you're stuck in Australia out of your control. So they use examples that a volcano erupted, because, pre-March 2019, that was about the only time you wouldn't travel. But guess what? COVID's here. So now everybody's travel is out of their control. There's rules, there's, restrictions. It's a crazy situation. So they'll have to have a good definition of what is out of someone's control. But obviously things like quarantine, etc., you can apply. Now, they're also talking about excluding things like if you're coming back for a family illness or for a specific, matter out of your control for compassionate grounds. So that, again, we'll wait and see what that definition is, but those things would be excluded. So the 183 days, in essence, is not such a bad problem, okay? I don't have, generally speaking, a problem with the 183 days and the exclusion. But the big issue, and this is really, really the bone of contention, is that if you're in Australia for more than 45 days and less than 183, it opens the door for the commissioner to apply a second test called the factor test to determine whether or not he considers you to be a tax resident, even withstanding that you've been in Australia less than 183 days. Now, this is where the can of worms really explodes, because they're talking about making it nice and simple, this test, not subjective, just absolute. And in doing so, they have proposed at this stage to have 4 simple questions. The first one being, do you have the right to reside permanently in Australia? Well, for an expatriate, that's an automatic tick, because by the nature of an expatriate, you are an Australian citizen, or at least a permanent resident. And, you know, the only people to be excluded from the right to reside permanently were people on temporary residency visas. So if you don't have the right to live forever in Australia, that's the only one that's going to be excluded from this test. So every expat, tick, 1 question right. Australian accommodation is they're saying that you've got access to somewhere to live that is not a hotel. Now, that doesn't mean your mum and dad's house, but it could mean a rental property you have, a holiday house, whatever the case may be. So most people might have that, particularly if you're staying longer, which is happening these days because travel is so difficult with quarantine, etc. It's very, very difficult to stay for just a week or 2 like it used to be. People are more likely to elongate their trips and more likely to have a holiday home that they can stay in. You know, it might be rented out on Airbnb while they're in absence. They're also looking at your Australian family there. And this is obviously, you know, relating to your immediate family, your wife and children under 18, because this is addressing the split family situation. So they are very obviously targeting that group where you're working abroad and your family is there. Now, again, it won't apply if you're less than 45 days in Australia, but 45 days is not that much. And then the 4th test is Australian economic interests. And that would include things like a substantial bank account, which they have not defined, but probably 50,000 or more. You know, it would include taxable property, which is basically just investment property. Now, shares, you know, investments, they're not taxable Australian property. You don't pay as a non-resident tax on shares. So they've been excluded. But one thing it does have as a catch-all is a family trust, etc. So if you've got a family trust, that will capture you. Now, again, I don't want to be alarmist, and I will just remind you that it only applies this test if you're in Australia more than 45 days. Now, to get potentially captured as a resident, the problem is you only have to say yes at the moment to 2 out of 4 of these questions. And given that everybody is allowed to be there permanently, and probably everybody's got an investment property or some level of activity, you know, investment down there, it's pretty easy to go, yes, I am, you know, therefore grabbed under this measure. And that's why this is such a bad test. This is a loaded deck against every single Australian expatriate. And it's really, really poorly done. It's too simplistic, you know, and at 45 days, it's a bad example. Now, the 45 days has allegedly been considered by the fact that most people have 4 weeks annual leave. So that's really what they based it. They said, oh, okay, if you've got 4 weeks annual leave, that's 28 days. You know, if we add a couple to that, 45, that should be fine. That should be fine. Well, the problem is that, you know, it's easy to go over 45 days, especially in a post-COVID world, you know, where maybe the quarantine is included, maybe it's not. We don't know yet if that will be outside of your control or inside of your control. You know, it's going to be more and more difficult, like I say, to do short-term trips. So most people, because of the expense, are likely to stay longer, and 45 days would be it. Now, one of the things that I look at is not how much holidays the individual may have, but if you look at a simple measure that I think would be more appropriate, is look at school holidays. You now get 8 to 10 weeks of school holidays. So that would be more appropriate a measure than, say, 4 weeks of annual leave. You know, and particularly because a lot of contracts allow that. And particularly now with mobility being so easy, where you could say, look, I'm going down and visit my family, my extended family for Christmas. Because it's so difficult to go, can I stay 2 or 3 weeks extra? I'll work from home while they're all mucking around during holidays. So to me, I would have thought a more appropriate measure would be school holidays rather than work holidays. So this is the thing that we really, really have to focus on for change and improvement. You know, the last test there is the overseas government official test. That replaces the superannuation test and basically just means if you're working for the government and you are deployed overseas, you will be a resident. Now, that's no change. That's always been the case. Anyone working on Australian embassies, that's counted as Australian soil, and you are always have, and this will continue on, as a tax resident when you're working on Australian soil or you're off on an Australian government project. Now, the last thing that I've mentioned there is residency commences on the first date of arrival, and there's a quirk here that also says that you can't be a resident unless you're in the year for more than 45 days. So the quirk is if you arrived on the 1st of June, you would only be in Australia 30 days. In the old rules, it would start on the 1st of June being date of arrival, date of change. But under the new rules, they're saying that if you arrive on the 1st of June, you're only in Australia 30 days. You stay a non-resident for that 30 days, which is a little bit nonsensical. Now, they have mentioned that in their paper. They have said this is a bit strange. Maybe the government might want to address that. I hope they do, because it seems odd to have that sort of weirdness. But importantly, where it is got even stranger is their assertion in the examples they're giving is if you might have popped down to Australia in August to just do a pre-reconnaissance, look at a property, visit friends, do a bit of business, and you stay for 2 or 3 weeks, and then you don't come back until June or May the following year, and you then stay and you move in, that gap between the August and the May trip, if you go over 45 days, they're going to treat it as if you moved to Australia in August, even though that was just an exploration trip. So that too sounds a little bit weird for me. Something needs to be done to bring that more to their attention and fix it. But overall, the key here is that the 45 days is the killer. And, people might think, well, that's a reasonable time. That's their assertion. They think 45 days, that's generous. But I don't believe so, not in the modern world, pre and post-COVID. It is very common for people that are particularly expatriates to have jobs that are regional. They have jobs that require them to travel backwards and forwards. Pilots alone would probably do more than 45 days in Australia just in arriving and departing. So that needs to be looked at very, very carefully.